Warren Buffett is buying Occidental Petroleum for the last 2 quarters. And this is beginning to be a really big investment for him. First of all, it is over 3% of his portfolio. But more importantly, he right now owns over 20% of the company. And just a few days ago, he got regulatory approval for owning 50% of Occidental Petroleum. Now, a lot of people are speculating that it may actually be the beginning of a slow process of acquiring the whole company. So let's see, what does Warren Buffett see in this company? Let's analyze it and think about what reasons he may have to invest in this company. Okay, so first of all, investors. Insider buys, that's a check, but actually almost all of the buys that are under insider buys are from Berkshire Hathaway. Because they own over 10% of the company, they cannot wait for a 13F filing. So it goes under insider buys. And super investors, yes, there are a number of super investors, but the one we are really interested in right now is Warren Buffett. Okay, so let's see the fundamentals of this company. Return on invested capital, that's an X. And the return is 2.8%. That is pretty low. We are looking for a return of about 10% or higher. So that doesn't look that good. But of course, we are dealing with a very big company in a business that is not growing rapidly. Okay, so free cash flow growth, that's also an X. It's 4.9% in the last 10 years. But we have to remember that last year was a record-breaking free cash flow for Occidental Petroleum. Okay, what about shares buyback? That's an X. In the last 10 years, they issued extra 18% of shares. But till 2018, they were buying back shares almost every year. And then COVID struck, everything changed, and they issued a lot of shares. So there is a chance that even though it doesn't look that good in the long run, that actually they will go back to their old way of buying back shares every year. And I'm sure Warren Buffett would really like that, because you don't have to invest any extra money and you get a bigger portion of the company every time there are some shares buybacks. Okay, what about dividend yield? It's a check. They have a dividend of 0.8%. And the last thing about fundamentals, years to pay debt. That's an X, because it would take them almost 4 years to pay their debt with their current free cash flow. Occidental Petroleum got into this debt problem in 2019 when COVID struck and there was this massive lockdown and they got hit pretty hard. Right now, they are paying this debt back. So they are on the right path to get this debt to a decent level. Okay, so right now, let's see evaluation with PE, price to earnings. So the current PE is 7, and the 5-year average PE for Occidental Petroleum, that's a check, is 28.8. So if we look just on the PE basis, it looks like this company got cheaper. But the other thing that we can do with PE is calculate a PEGI ratio, which is price to earnings divided by revenue growth and dividend yield. And what we are looking for is a number below 1, which would indicate that the growth and the dividend combined are worth more than the current valuation with a PE ratio. Okay, so the revenue growth is 0.8% and the dividend yield also is 0.8%. So if we divide the current PE with those numbers, that's an X, we end up with a number of 4.37. So that's really high. It doesn't seem like the growth and the dividend are worth the current price. Let's try to do a valuation of this company with a discounted cash flow formula. And for that, we will have to make some estimates. First, the growth estimate for the first 5 years and then another 5 years. And we will make 3 scenarios, a low, a medium, and a high one. So for the low scenario and the first 5 years, let's say the growth will be 1% and then it will keep at this level. For a medium scenario, 2% growth and then 3% growth. And for the high scenario, let's say 3% for the next 5 years and then 4% for another 5 years. And with those estimates, that's the intrinsic value of the company. It should be somewhere between $64 and $82. But that's not the price we should be paying for this company. We should always use a margin of safety. I use a 30% margin of safety, which allows us to make mistakes if the estimates are wrong, if the company will do worse than we expected. Still, we have a bigger chance of making this investment work. So with the margin of safety, the price that we should be looking for is somewhere between $45 and $57. And the current price is $71. So it's all red. We can see some green without the margin of safety, but like I said, we shouldn't buy at that price. So let's try to think of the reasons why Warren Buffett would invest in this company. Well, first of all, he bought the shares between $46 and $60, as far as we know, looking at the dates when he bought the shares. So he was exactly in this window. But also an oil company or any company that has to do with oil is usually a good hedge against inflation. And we have that right now all over the world. Warren Buffett also believes that the demand for fossil fuel is going to keep at least stable. And if we look at the data, this is the case, even though a lot of governments are pushing to green energy, still it will take so much time to actually make this transition. And in the meantime, Occidental Petroleum can make a lot of money. Also, the invasion of Ukraine by Russia and the fact that there was a lack of investment in new oil fields for the last 5 years puts Occidental Petroleum in a very strong place. And the last reason is the CEO of Occidental Petroleum. Warren Buffett always says that the management of the company is one of the key features of that company. And he really likes the way that Vicky Holub is running this company. So if we combine all those things and the fact that he paid the right price for this company, makes it an interesting investment. But if you would want to invest in it, then please do your own due diligence and consider the whole analysis that we do here just the first step in your understanding of this company. Okay, so thank you very much for today. I hope you enjoyed this video. If so, then please like it. And if you want to see more videos like that, then please subscribe to the channel if you haven't already. Thanks again, and bye-bye.